it's a good budget. It's a good budget without too much bad news. The true impact of the capital gain tax changes, not on the equity market, but it's on the real estate market. And people have not still comprehended that.
So, Feroze, thank you so much for joining us. First off, your initial reaction as far as the budget was concerned, and obviously the all-important announcements with regard to taxation.
Yes, so I think there are three things. One is the simplification theme, which I've been highlighting for the last couple of years, has finally come through. The true impact of the capital gain tax changes, not on the equity market, but it's on the real estate market. And people have not still comprehended that. The largest impact is on the real estate market, because real estate now will not have any indexation. Okay, 12.5% will be the flat tax. Indexation has been done away with my preliminary reads of the bill. Now that's a big change. Okay, the need for anybody to reinvest in real estate will come down, because if he's going to pay 12.5% tax, he might as well pay the Section 54's relevance will come down. So it will have a very long-term impact on the real estate market, because Indian real estate market has largely thrived on Section 54, where a person sells a real estate property, buys back real estate, does not pay tax. Now, if the tax rate is 12.5%, and the fact that your re-registration costs are 6%, anybody who sells a property with a gain of 5 crores, he is better off paying 50 lakhs of tax or 52 lakhs of tax as against paying 30 lakhs for registering a new property. So real estate will go through a paradigm shift, and it will take long periods of time for the disadvantage to show up. Point one. Point two, the fine print of Section 50AA has been changed, and fund of funds in the mutual fund category, which had come inadvertently into Section 50AA, have been removed successfully, because they have now said any fund which invests more than 65% in debt and money market instruments is what classifies into 50AA. Earlier, the language was just the opposite, 35% minimum to be needed in equity. So now the language has changed, so it's a good news for 50AA for fund of funds. Third, LRS, liberalized remittance scheme. Any global investments were attracting 20% tax, now they will attract 12.5% tax. Private markets, which is a large market, has now come down to 12.5% tax. There has been a change in the OFS also in the finance bill from a taxation standpoint for promoters in IPOs. So these are the few very important changes, but I think the impact of this will be understood in times to come. I don't think people have still deciphered the full impact. I've tried to narrate.
Yes, absolutely. Because I was wondering about the real estate aspect. It wasn't clear from the budget speech. So thank you for the clarification as well. The other clarification, Feroze, is on the long-term capital gains tax hike. Is it retrospective for this financial year, or is it effective today?
See, it is effective from tomorrow, basically, from tonight.
From tomorrow.
So you will not get a grandfathering. I've said numerous times, when zero tax becomes 10%, then you get grandfathering. From 10 to 12.5, you'll not get your gains till now grandfathered. So your unbooked gains now, because if you wouldn't have sold it today, you wouldn't have sold it today, still there's an hour. So it will be taxed at 12.5 from tomorrow. I have to look at the fine print. It might just be from midnight of yesterday. So don't hold me to that one day, but it is not, it is for any sale to be done going forward. So your tax rates have changed, and you will not get the gains till today will not be grandfathered.
Right. In terms of how they've structured the changes to the capital gains tax regime altogether, it was something, of course, we've been talking about, like you said, and we've been expecting something to come in. But the manner in which it's being done, how do you view that?
So I'm reasonably satisfied, because three dimensions have been addressed. One is the tax rate differentials in long term were different. The periods were different. Now there are only two periods, 1 year and 2 year. There is no third period of 3 years. So that's simplification. Third, STT and non-STT in long term category have the same rates. Only in the short term have two different rates, 30% or 20%. So STT's relevance has gone down from a taxation standpoint, but STT's relevance from the revenue standpoint has gone up. government also has very sharply used the retail investor shoulder to increase their revenues in STT. STT
Yes.
change of 0.12, 0.125 to 0.2% does not impact a retail investor's transactions for a few rupees. He's not going to be a deterrent. It will not be a deterrent for him to come. But the income increase of 50-60% in the STT category, I think is a little unfair way of taking the money, especially given the fact that STT was introduced when capital gain tax was not there. Now you're increasing long-term capital gain tax and increasing the other instrument which you brought in when you brought that to zero. So both of them increasing is illogical. And retail, if you wanted to
Hmm.
actually solve for retail participation in FNO, STT is the last thing which a retail guy is worried about for his lot.
Yeah.
For to buy one Nifty and sell one Nifty in futures, the cost was 3 rupees. Now it is 4.3 rupees for one Nifty.
Right.
Of course, you have a lot of 50 or
Hmm.
75, but that's insignificant amounts. 50-60 rupees will not be a deterrent for a retail participation for one lot of buying and selling futures.
Right. Feroze, the other aspect is with regard to, the comments that have been coming in, both from the center, from the finance minister, from SEBI, about how they are not too happy with the way people have been trading, with the valuations in the market. SEBI raised that flag as well. So obviously, this seems like they're trying to sort of bring the heat down as far as the market is concerned. But do you think that's going to have any impact? Because at the end of the day, from 10 to 12.5% is not that much.
Yes, it's not that much, and it does not impact large participants because they've moved that 1 lakh exemption to 1,25,000,
Yes.
which is also a reasonable change, 25% change, because that was introduced in 2018. I would like it to have seen it at 1.5, 2 lakhs, because Indian households have funded the country's fiscal deficit for decades, and they have not made money in their portfolios. Foreigners have made money out of Indian equities more than the Indians have made out of Indian equities. So you should
Hmm.
incentivize Indians now to participate in the India
Yes.
growth story by not buying PPF, EPF, bonds, insurance, and you should incentivize them. I think incentive of just a 25,000 increase is a little disappointing, but I think the market is definitely not going to react. There is also a positive sentiment to simplification, and especially private markets. I think that also has a large sentiment impact. If a promoter was selling in private equity, he was getting taxed 20 plus surcharge. Now he's going to be taxed 12.5 plus surcharge. That will bring in a lot of foreign investment, and people will be able to ready to sell their unlisted businesses to foreign investment. So capital formation in businesses which are in the unlisted space is going to happen. So there is a positive tinge also to that 12.5, which is the private market capital formation becomes so much good. So if capital is formed, then there will be more listed companies in the future which will come into listing, not because of the tax gain of the OFS, but because of its need of to raise primary capital as against secondary capital.
Right. So on the road ahead, Feroze, because elections are over, now budget is over. So all of these big events are now done and dusted, and we are left with where we are as far as valuations are concerned, as far as the market is concerned. So what's the strategy? What's the advice for investors?
See, I personally think that like I had said yesterday, if the budget is not too bad, the market will
Hmm.
hold up. The budget is not
Hmm.
bad at all because the capital expenditure has been kept intact. The fiscal deficit, fiscal consolidation is clearly there, and 4.9 and 4.5 target for the next year as a percentage of GDP is great. I think the revenue estimates are again underestimated. So I think the 4.5 the next year number is quite not so ambitious as it looks optically. So I personally think it's a good budget. It's a good budget without too much bad news. The market has to hold up. There is a lakh and a quarter, 1,25,000 crores of cash sitting in DIIs, which was
Yeah.
80,000 crores. So there's 55,000 crores of cash to be deployed. The SIP numbers will keep coming in because that's not coming in on the back of past performance. It's coming on the back of discipline this time around. So I think markets valuations have been re-rated and not momentarily so. Some people have been expecting corrections for ages, and when I spoke to them, they said the markets are at 25, 24, 500. So when I asked them what is the earnings of Nifty, they've not tracked the absolute
Hmm.
earnings of Nifty. The earnings of Nifty has come to 1,048 last year. Okay,
Hmm.
everybody looks at growth of earnings, but the absolute value of earnings was 960 was our estimate for last year. It is 1048. That's 8%
Okay.
more, 9% more than the aggressive estimate we had. So from 819 rupees earning of Nifty, we have reached almost 140, 150 rupees. So that's a earnings jump equal to the price jump of Nifty. So everybody is looking at the price jump in 1 year, but they're not looking at the earnings jump being equal in rupee terms
Yeah.
as a percentage.
Right. And also, Firoz, there has been a lot of focus and emphasis on jobs, skilling. That was very evident from the speech and the outlay and the schemes that have been announced. Obviously, jobs has been one biggest issue as far as India is concerned. Do you think this is going to go some way, at least to some extent, address those issues?
See, I personally think yes, it will. I'm glad that they're bringing the elephant in the room to the foray.
Yeah.
That I
Yeah.
think is very heartening. But I personally think on most of these items, it is not about the budget speech narrative. It is about the implementation of the same. Because
Yes.
you can have the most pessimistic implementation with an optimistic tonality when you're presenting, and you might feel that everything will be done, but there's so many items which relatively might not be better than last year, but you can still make us, or I would believe that it's better. So I would say I would wait and watch on that space, because the budget speech does not speak of how effective the implementation will be, how effective will be the improvement in the implementation. But I'm happy that it was brought up front, and I think
Yes.
that's half battle won.
Yes, absolutely. And finally, Firoz, in terms of what you're recommending in terms of advice for investors on their portfolio construction, allocation between gold, equities, debt, etc., and real estate, of course. Any changes there? Because, like you said, real estate has seen a big change. Gold is now, of course, going to get cheaper.
Yes, gold is going to get cheaper. Gold's taxation is going to be a little better, because it's going to be taxed at 12 and a half instead of 20 plus plus, of course, without indexation. Now, coming back to allocation, I have been negative on residential metro real estate for the last 10 years. And we've analyzed 1,278 properties in the last few months and calculated the compounded return on those residential properties across the city, across 27 different cities, and which are owned by our clients. The return is only 8%. So real estate, residential real estate over long periods of time is not able to produce double-digit return. If any investor sits down and takes an Excel sheet and calculates for his own property, which he has been living on or he has rented out, what is the IRR? He or she will be
Hmm.
surprised that it will not be double digit. Optically, it look like double digit. It's not double digit. Avni, I would urge you to
Right.
do that exercise over a weekend. So
Right.
real estate, I would say zero for the next residential metro real estate is what I'm talking about.
Yes.
Commercial and plots, if you have the capability or the size for commercial or the capability to buy farmland, change purpose, that's a separate story altogether. So residential metro
Hmm.
real estate, when you see fancy builder presentations and get lured to buy it, that will not give you double digit return. That's point one on real estate. Gold, I think India has enough gold. I think it's time to financialize our gold. And sovereign gold bond gives you a edge over the other physical gold by 3-4% per annum because of the interest and the capital gain exemption. So move gold first, convert your coins and bars, not ornaments, of course, to
Yes.
sovereign gold bonds. That's on the gold. On equity, we have been very clear that equity should be 60% or 55 to 65% of long-term monies, and 30%, 35% should be in structure products, which we recommend, which have a risk which is significantly lower than Nifty, but the returns are closer to Nifty and above. So, so this is what we are currently recommending to HNI and Ultra HNI, and we continue to do so. And the budget reinforces that we were on the right direction. So we'll do it with better throttle now.
All right. Okay, Firoz, we'll leave it there. Thank you so much for breaking that down for us and joining us on this show.